Because this is it. The ultimate, most monumental macro gift ever given to rescue all of humanity from this. That they're in, so it's there in front of you. So then people are like, yeah, but what am I investing in? I'm like, okay, listen, Dune, all the noise. There's a bunch of decentralized businesses that sell block space, and they all have different types of block space ones going, hey, mine's the most secure, and the oldest somebody else is like, oh, mine's the internet computer, and somebody's like, mine's computers, but faster, they're just selling block space. So there's a bunch of companies selling block space or applications on top of that block space. That's all the spaces. It's just a technology, and it's an adoption. So our job within this is now not get philosophical and tribal about where do I invest in that technology and screw it up. Our job is to maximize the OP. During a recent interview on Blockworks Macro with our pal, we delve into the idea of exponential growth in technology and its wide-ranging consequences. In his exponential age thesis, he analyses how different industries like cryptocurrencies and artificial intelligence are being transformed by these rapid technological advancements. At roughly $162,000, Bitcoin has lost less than 1% in the past 24 hours and 10% in the past week. Pal presents his crypto thesis, which emphasizes the future-shaping potential of digital currencies and blockchain technology, and discusses the present status of Bitcoin trading in light of recent fluctuations, highlighting Bitcoin's outperformance compared to traditional tech stocks like the Nasdaq. Economy and money. Here we have a worldwide service that is blockchain-based, similar to the internet, yet distinct from all of these. You can't put money into global utility networks, roads, or trains, but there's a behavioral incentive system in place to grow the network thanks to tokenization. As more people join, the number goes up, more people join, and so on. This leads to more capital in the network, which means more applications are built and the network gets more and more used. We're all a part of this brilliant new asset class that doesn't exist anywhere else in the world. For example, in a small Indian town, the bid-offer spread is 50% for gold, even though there is no gold in the world. This is available on an Indian mobile phone. That country in Southeast Asia, Vanuatu, New York, Fiji, and the Cayman Islands, the same thing, and it also happens to be the internet's infrastructure layer for the system's value and storage. And you know that distributed database, which is a public utility good, okay, brilliant. It's a $2 and a $500 billion market cap today. If we just extrapolate out the trend rate of growth, it gets to $1 trillion by about 2032. Okay, so this is the biggest wealth drop generating opportunity in all human history, and I try and communicate it, but people don't want to hear it. It's the point, right? This is a narrative-driven attention space, and so they just want what they can do. I made it very clear all the way through, hey, 90% of my liquid net worth is basically allocated right now to Solana. I moved some from ETH. I don't have much Bitcoin right now. Doesn't mean I don't like Bitcoin. I just think the others go up more simple, as that own a bunch of high-end NFTs that think. I have another thesis about, and then beyond that, I do a bit of speculation and other stuff, but the fun of it, but the time horizon thing is I can say it freaks everybody out, and I've stepped back, and it was only in the last 2 weeks I've realized the risk, the real thing that's going on crypto. Twitter, and why the banana zone resonates and why you get this backlash is this is everybody's hopes and dreams. It's yours, it's mine, it's everybody's. So now people, they worry about the cycle. I don't remember Jeff Bezos caring about the business cycle. He just owned his stock. If you're in a secular bull market, there is demand for the good that you produce, in this case, block space, premium block space, and mother trading it. What you should do is buy all the sell-offs. If it goes down 85%, you're like, hell yes, it took me a long time to realize that, because I too was the kind of cyclical guy, and I think, well, let's sell it at the top. So I think I can predict somewhat the tops from the everything code cycle and the usual bunch of stuff. But does it? Sure, you might be interested in housing, which is why lifestyle chips are available. Okay, fine, but I tell you, if you've made a ton of money and you take it off at the high and you nail it, you will not put the same amount back in at the low down 85%. When everybody's calling you a criminal, they're going to shoot everybody involved in crypto. There's going to be the gulags for crypto. Hey, investors, you're like, I'm not doing it, and you will end up screwing the whole thing up. The other one I was talking to Chris Bizey about is people are really getting concerned about, where does the top come? Is it early? Is it early? Is it normal? Is it, every time it's always been December, but for some reason everyone's freaked out. It's going to be a different time now. Okay, fine. And that's because of PTSD, but it's not that I don't know, we don't know, none of us know. Is it going to be a bubble? Toop is going to be, we don't. It doesn't matter. What is the one that scares me is what happens if the correction in 2026 because we don't have 22, we don't have, beating out of massive inflation and the pandemic stuff. Imagine if we just only went down 40% in Bitcoin and 20% in NASDAQ. This is kind of my favorite probability. Sure, there's a whole bunch of old are going to go down 99%. I'm merely bringing up the fact that in the Bitcoin market, everyone is going to miss the trade MH as they wait for the down 70. While stable coins are being recognized by the EU, the sentiment has always been that ICOs had the same PTSD that everyone in the past cycle had with iOS. I mean, the adoption of blockchain technology is undeniable. People this go back to time horizon they expect. It all tomorrow. Why isn't Google gone to web-free business and Meta, and why is the entire financial system not on new blockchain rails by the end of this week on my blockchain? I'm like, it doesn't work like that. It's all at the margin until it's exponential, so I just think it's a time horizon issue, and people are new to this kind of stuff of understanding both exponentials and long duration assets. But when I look back at my first Bitcoin investment at 200, I mean, what a different world 200, but you didn't see it then. It's very difficult to see because of exponentials found over this process. Was that everybody in macro had been struggling for about 10 years. The odd trade came along, like the buy bonds where diamonds trade. You can make a ton of money on it, but there was people were struggling because we didn't understand the world equities just kept going up and we just couldn't get our teeth into anything because we weren't looking at the right thing. There was a mega trend going on, which was this liquidity cycle. And once you saw it, you realized that everything was correlated to it. So if everything is correlated to it, then it becomes interesting to say, okay, well, then if it's all the same trade, what's the best performing asset now? The other really important thing, what I think has happened, and it took me too long to realize this, I'm annoyed at myself, is that the Federal Reserve and all the central banks took away left tail risk in AO. When you value your collateral, you experience debt deflation according to the global macro view. Falls too much that you can't pay for the debts and it gets called upon and people sell the collateral and you get into this cycle. We had that in 2008. What did they do to base the currency? What did it do? Optically make asset prices rise, so the collateral went up. The Europeans did it even harder in 2012. So what they've said, and we did it again in COVID, so what they've said is you cannot have a debt deflation. We will not allow it, and we will debase the currency by 8% a year to pay for it. Think of that as a put option that you're paying on the system not blowing up, which is a very different way of looking at it as opposed to, I can't believe they're robbing me of percent. If you say, hey, listen, it's a mutualized cost of a put option and we all pay 8%, so the whole system doesn't blow up, okay. So if we've taken away the left tail and everything is correlated on this debt refi cycle and they have to debase currency over time to do it well, this may well be the best macro risk-taking opportunity of all time. And then when you just break it all down, what I did simply was divided all of the main assets by the global liquidity or even the Fed balance sheet, whatever measure you want to use. M2 doesn't really matter. Nothing else goes up except the NASDAQ and crypto, and the NASDAQ since 2011 has done 177% a year returns and Bitcoin's done 150. So you're like, holy okay, can of make some mockery of anything else you invest in. Everything becomes suboptimal. So then people go, yeah, but what about the risk return, the volatility? That 150% return is after 380% drawdowns. They're included in that number. Oh, and the longer time horizon you take it, the more ridiculous it is. It's an alien asset class.